My name is Bleecker Seaman. I'm co-CEO of Low Enterprises Investors. We're a LA-based real estate investment management firm, pursue value-added and opportunistic real estate strategies. Today we've got about $2 billion under management in a series of closed-end funds as well as separate account relationships with large institutional investors. You know, we're coming through a period of time where the markets were very challenging, and that's got to impact the business and certainly impact the investment management business and how we're all looking at running our companies and better serving our investors. And I think what you're going to see going forward, at least from our perspective, is clearly investors are demanding better visibility as it relates to their own investment through management firms. And so I think the successful managers going forward are going to be successful with their communication efforts with their investors. I think greater clarity in some of the investment strategies. We've come through a period of time where investors provided managers with a lot of discretion on what they could invest in. And I think investors today are now going to demand, I want to have greater specificity on the type of investment strategy, property types, markets that my manager is going to pursue. You know, we've been through a period of time where there was incredible liquidity in the marketplace, and that generated, growth in the investment management business, so new managers. Clearly, I think with the slowdown in the market environment, and at least in the near term, we'll see improvement, but certainly not back to the levels we've been through recently at the peak of the last cycle. And so that's going to result in consolidation. So you're going to see consolidation of managers, both, I'll say, from an active standpoint in terms of managers buying other managers, and then you're going to see some managers just go away in this environment. And so, at some level that puts a greater burden on investors to make sure they're evaluating the managers they're working with. But, I think we're now through a major downturn, but the industry has really matured. As you look back in history, the early 90s was a dramatic downturn and the business was still in its infancy. And I think both from an investor side as well as a manager side, the business has matured, and I think despite a significant downturn, I see the business reacting well to that downturn from the standpoint of looking ahead, addressing some of the fundamental changes that do need to be made, and we hope position ourselves to be successful through this next cycle. We, Low Enterprises, invest across a broad range of property types. We tend to be known for a hotel investment activity, which is roughly 30 to 40% of our business. But the hotel sector has gone through a significant downturn with this most recent cycle bottom. Hotels tend to react first to both the upside and downside. So it was first to go into the downturn, and it was a dramatic downturn, really one of the most dramatic downturns since the Great Depression. And so now, as we're coming out of it, we're already seeing improvement, certainly off of significant bottoms. But I think what I'm encouraged by now in the third quarter of 2010, through this year, we've seen continued improvement in the hotel sector. A lot of that's been driven by the business traveler, as well as group business, which I think are positive signs as it relates to businesses looking to grow their businesses. And so a positive sign, and hotels tend to be a leading indicator of economic recovery. And we really, despite people's beliefs that in the third quarter there has been greater concern about potentially a double dip or growth slowing even further, we're encouraged that in our hotel properties, we haven't seen meaningful slowdown in the business, so the improvement over prior year has continued, and we believe that'll be a good indicator and is a good indicator that this positive trend is going to continue and that we'll expect to see continued growth into 2011.